Welcome to yet another episode of this podcast series titled The Many Aspects of Financial Inclusion, where we explore the challenges and opportunities in the financial inclusion space. My name is Sunil Bhatt, and I work as an associate partner in MicroSave Consulting, MSc, and have been closely working with the Financial Inclusion Lab since its inception. So, Financial Inclusion Lab is an accelerator program for early stage startups, and we are running this in collaboration with CIIE.co of IIM Ahmedabad. And in this program, MSc and CIIE.co have supported and incubated close to 50 startups in the last 5 years. And these startups, predominantly fintechs, build solutions primarily for the Bharat segment. And this Bharat segment is the segment which is also referred to as the India 2 segment, which constitutes to about 550 to 600 million people. So it's like a huge segment, the middle of the pyramid. And the Financial Inclusion Lab is generously supported by various international donor organizations, including JP Morgan, the Bill and Melinda Gates Foundation, MetLife Foundation, Omidyar, MSDF, and others. So in this podcast, we'll dive deeper into the startups whom we incubated. We'll try to understand the journeys of their founders and try to understand what is it that they are building for. What are the problem statements that they are building for? What sort of excited them? What is their vision for Bharat, and how they are planning to go about it. So we may not have all the answers, but the idea is to provide a glimpse of what it takes to build startups for the Bharat segment. So I would also like to welcome my colleague who leads the Financial Inclusion Lab, Nishant. Welcome, Nishant.
Thanks, Sunil.
So moving to the guest today, so we will be talking about Finarcane, and we have the founder of Finarcane, Nikhil Kurhe, and yeah. So even before we proceed with our questions, so Nikhil, welcome to this podcast.
Thank you, Sunil. Glad to be here. Looking forward to this discussion.
Yeah, sure. So this webinar is largely around the innovation which is happening in the lending ecosystem in India, and so we have a few questions for Nikhil. And even before I sort of delve into the questions, so let me throw a term to you, which is kind of catching frenzy these days. So it's DPI, or Digital Public Infrastructure, right? So we have public infrastructure, right? All of us understand what public infrastructure is: essentially roads, highways, bridges, and railroads and others, which are commonly used by public. Now you add D to it, and it becomes digital public infrastructure. So it is nothing but infrastructure which is digital in nature, in its simplest way, which sort of mimics the physical infrastructure in many ways. And this DPI sort of helps innovators such as Finarcane to build digital pathways so that they are able to serve the society by providing, say, financial services, by being an enabler to this. So there could be two types of players. One is you enable financial services to the Bharat segment, and one is you directly provide financial services. So Finarcane and Nikhil belong to the enabling category, and we'll explore a little bit more about them as well. So when you look at DPIs, right? So I mean, it could be digital identity, it could be payments, and it could be data as well, right? So some of the common examples of DPIs include Aadhaar. I think one of the most successful programs globally, started in 2009, and it's India's flagship digital identity program. So nearly all of Indians, almost all Indians have an Aadhaar card now. The other very, very common name you hear is UPI, the Unified Payments Interface, and clocking more than 9.5 or 9.4 billion transactions every month, as per the latest data, right? And then there are a host of other DPIs as well, which are very popular or becoming popular. AgriStack is one, Ayushman Bharat Digital Mission is one, and the last one, which is of today's interest, is account aggregators, right? So today we'll be extensively talking about account aggregators. What does it even mean? And even though we know that RBI had come out with the framework as early as 2016, only since 2021 is when we are seeing sort of traction in account aggregators. And Nikhil and Finarcane work very, very closely with this account aggregator framework, and as a TSP. Now, again, another jargon, so I'll let Nikhil to again explain that. So before we even delve into all of these details, so Nikhil, why don't you give us your brief background, what you did before Finarcane, and how did Finarcane happen?
Right. No, thank you for setting that context. Very helpful. And I think, first of all, whoever, India, we love our three-letter acronyms. So the moment, we got the branding right, I think digital public infrastructure is a great way to, brand colloquially the technology that has been around. And with it being, one of the core central themes around this year's G20, summit as well. I think the world is taking notice at what we're building in India. So excellent place for us to be as well as a company. And yeah, so let me start with my background. Prior to being one of the co-founders at Finarcon, I was working as a data engineer for 3 years here at a business intelligence sort of company in Pune. And at my first job, I met really smart data engineers and data folks, and we sort of came across the so we were actually looking to build something around personal finance, right? We were looking at robo advisory. We were looking at how to make things easier when it comes to automating your money. And the biggest challenge we ran into, back then, and the timeline is, like IND money's beta had, say, just started to come out, right? Or even before that, was that access to data was really difficult. And getting financial data meant bank statements, CAMs, or cash, the consolidated account statements, or the NSDL cash, or, and, just haphazard makeshift solutions, right? So luckily, with some Googling, we found that before, our governor sort of ended his term, he signed off on, the RBI governor signed off on the account aggregator initiative. And November of 2017, I believe, was when the first API specs and the update to the master circular had come out, the account aggregator master circular from RBI. So that's when we came across this. And our core insight was that data, data is going to become mainstream. Data is going to become a commodity. And this is not just happening in financial services, but we had started to hear about the health stack, and then NDHM, and now eventually it's ABDM. So kal kuch aur rahega, but the concept stays there, that India is building these digital infrastructure highways for data. And we had historical precedent, like you mentioned, of Aadhaar to sort of draw on that, and then of course payments had started to become a runaway success with whatever NPCI was doing. So we felt eventually, what is a world where an account aggregator or a APDM or all these other DPIs look like, say, at a UPI scale or at an Aadhaar scale, right? So we envisioned that, and it was very obvious to us that this is not going to be a financial services problem or like a health tech problem. at its core, it will be a data engineering problem, right? Because you're dealing with massive amounts of data at scale. You're dealing with very private, highly sensitive data. So there are questions and concerns around data privacy and security as well. And the more we thought about it, the more it seemed like a very hard and a very scalable sort of data problem. And we had that background, as a team. So that's fundamentally the origin story, that we approach this, DPI space, the data layer of the DPIs, fundamentally as a data engineering problem. And as outsiders who had little to no experience in financial services, I think we've done fairly well to sort of bring that perspective. And yeah, so that's the quick
Mm. Yeah.
context and background.
Yeah, thank you. Thanks for that. So even before we get into it, so why don't you simplify these terms a little bit for our audience? I mean, because we are talking of account aggregators, I introduced you as a TSP. Then there is something called as a FIU and a FIP and others. So can you please make an attempt to simplify these terms as if you would explain it to say a 10-year old? If you
Definitely.
just take a yeah.
Yeah. No, so I'll do you one better. I've had to explain this to my parents and my relatives quite a few times
Yeah,
now. So
that's
so
okay.
so yeah, I've had some practice there. So think of it this way. Today, you create data all the time as an individual. Anytime you're interacting with something digital in nature, or even a person on the other end is filling out a form, you're creating a data footprint. What the regulators said was that, listen, Nikhil as an individual, or the listeners here, um, clearly they are creating a lot of data, but when they are looking to access the specific products or services in any sector, right? We're not just talking financial services. It can be health, or it can be bunch of other verticals where we are seeing digital public infrastructure. The whole idea is that let the customer make a choice to share that data, right? And in some shape or form, we were already doing this. We were getting our bank statements, logging into some sort of net banking portal, going to a bank branch, getting that statement attested, and then offering that, or like a electricity bill, or so on and so forth for different purposes. Now, coming to the framework and the jargons, if we take parallels here to this example, Nikhil as an individual is, having now a handle. So similar to a UPI handle, Nikhil will have a virtual user address, or a VUA, on this account aggregator framework. And, the other DPIs are often following a similar mechanism. So again, you have a Nikhil @Abha on the whole Ayushman Bharat digital health mission site. And on the account aggregator, Nikhil would be Nikhil whatever is the account aggregator. RBI has created a new category of NBFC-AA, where these are new entities who apply for this NBFC-AA license, and subsequently are in the business of primarily consent management. The account aggregators themselves are data blind and are expected to be solely in the business of consent management. Um, so now what happened was that there was a need for these organizations who are custodians of Nikhil's data, like say a bank or an insurance company, or a depository, to actually implement some technical specifications which are adhering to the protocols which are issued by RBI's ITM remit to share data. So there were two options. One, they could implement these technical specifications and data bridges themselves, or they could work with a technology service provider like us. So that is the role that we play, where we will help organizations who are custodians of Nikhil's data and Sunil's data to share, that data with you and I's explicit consent with any regulated requesting entity. So an entity who is sharing data then becomes the financial information provider, or FIP, and that data is then shared via an account aggregator who is data blind, the A, to a financial information user, which is the FIU. where Nikhil has, say, created uh, given that consent to share that data. So an example would be, a Nikhil is filing his taxes, or Nikhil, walks into a bank branch to get a loan. Um, Instead of, Nikhil providing physical documents and statements, Nikhil just says, here's my virtual user address, VUI handle, Nikhil@a. The bank or the lender request for, say 1 year or 2 years of data, depending on, the sort of product and their product specification. And using that data, they're getting that data not only in a machine readable format, but they're also getting it digitally signed directly from Trace. So this eliminates a very big, concern which had historically existed, where there are a lot of cases of document frauds and, individuals or other entities tampering with data. So that is pretty much eliminated in the account aggregator ecosystem because of how the technical security specifications have been designed. So it is two-way, encryption. We won't go into the details on this, but
Right.
let's just say that the encryption is, world class. And yeah, so the role,
Right.
just a quick recap. We have FIP, we have FIUs, we have the account aggregators, we have the end individuals, and then we have technology service providers like us, like
Right.
Finarcare.
Right. So I'll come to TSP. So what we are essentially saying is data moves from a FIP, which is a financial institution, to a FIU, which is another financial institution, and there is an account aggregator entity which is in between. And the movement of data is encrypt, which essentially means it is safe. Data, no one can sort of tamper it, including the account aggregator who cannot sort of read the data. So they just act as pipes, right? So which sort of transfer the information. So, okay, so this is clear. So coming to the second part of the question. So you said TSP. So can you highlight a little bit more on what does a technology service provider mean in this context? And you can also sort of maybe club it into the other question, which is what is the problem that you are solving, right? So because you initially answered about the need for such a system. So if you could kind of club both of this, what's the challenge, and then what's your role? Because I understand, like you as a TSP, there are, I think, more than 40 or 45 other institutions who also act as TSPs, right? And the number could also increase in the coming days.
Correct. So technology service providers, or TSPs, is fundamentally it's a colloquially sort of catch-all phrase for anyone who's offering any related services around the account aggregator framework. So the spectrum out there is fairly broad with respect to what sort of services, different companies are offering around this framework. For others, it's a feature. For us, we started in this ecosystem and, we built a company specifically around it. But, let me, go a little bit deeper. So what the protocol and RBI and, the other aggregators are very specific on all of these KPIs, not just the account aggregators. They are very clear that we want to solve for the fundamentals. So what that means is that in the absence of an account aggregator, there would be private companies who would be charging a massive amount of, money and build a monopoly around, say, just data acquisition, right? So what would happen is the price point at which data, just raw data, could be acquired, right, was too high. So what that meant was that financial institutions then had to take a call that they could only offer their services to a specific persona, where, or, specific products where the unit economics sort of made sense at those price points. So what that meant was, a lot of the lower middle income segment people, where the unit economics or the ticket sizes of the credit or insurance product, it didn't make sense to, get their data or process it through these expensive pipes. What the account aggregator framework does, what any of the DPIs do, is they commoditize a lot of the access to the database, right? So, so now the bar for companies, who are intermediaries like us, is much higher. So the bar for us to create value and therefore justify whatever we want to charge our customers who are, financial entities is that much higher. And I think that makes a lot of sense because the ultimate winner here is the end consumer. A larger subset of the population is now, covered through these services. And India has always been a volumes market, and this sector is equally heading into that direction. So that is a net positive and a net win for the end consumers. Now, coming to what Finarkin does, we believe that, and equally our regulators also believe that the protocol will provide the raw data, right? So these protocols will define how raw structured financial data, health data, agriculture data should look like. But as to what innovation and how that data should be used, beyond is up to market participants and regulated entities in say financial services to decide. And that's where we come in. So we felt that our approach was that maybe there's not a one size fits all today. If you look at how KYC or payments are done, it has payments fundamentally has been a 4-party, 5-party system. Yes, we had new rails and new innovations around it, and but at max it's a fairly narrow sort of funnel. Similarly on how KYC happens, it's a very well defined structural process. You have guidelines coming in from regulators very frequently. Just the other day, I think there were a few new changes in the KYC guidelines again. um, but data is, it just opens up, right? Once I give you data, you may look at it very differently. Nishad may look at it very differently. Every other business will interpret data very differently, and that's ultimately how we build our processes, make decisions, and differentiate. So that was our thesis, that on these digital public infrastructure rails, especially the data rails, there will not be a one size fits all for businesses. Every business will ultimately have their own interpretation of data and how they want to use this data. So what our business is, fundamentally therefore building these customized data products on third-party data like the account aggregator framework, and also other data sources like the internal first-party data, or other sources that they may want to work with. Because again, a business like a bank or any lender or any insurance company is not going to look at just Nikhil's bank statement in isolation. They will look at it in tandem with a bunch of other data points, both online and offline, that they may have captured about the consumer. And our thesis was that, can we help these businesses make sense of this data and get it to a state where it actually is usable. So
Okay.
so we have productized that to a large extent, and fundamentally that's our business model, where we
Okay.
help these customers build data products. Yeah.
Yeah. Yeah. Just for the sake of simplicity, I mean, if you could tell our audience in terms of where exactly you operate as a TSP. On one end, there is a FIP, there is an account aggregator, and on the other end, there is a FIU. So where do you sit in? So if you could just like throw a little bit more light on that, so that people are able to kind of imagine your role as a TSP.
Sure. So we most different TSPs follow different models. Few prefer only to be on the FIU side. Few prefer to operate on both, and different people offer different services. But for Finarkin, we operate on both sides. And initially, we took a very specific sectoral focus. We started with the insurance segment, and we really went deep, on that space. And today we work with, I think, almost 18 or 20 odd insurance companies, life in general. And we intend to, continue to keep growing that number. Uh, but yeah, so the role that Finarca is playing, one is we will help these companies publish data in a specific format and schema that the regulators like IRDA or RBI or SEBI expects on these protocols. We will help them with not just the DPI, but we'll also, and again, this was one of the core reasons why we went for insurance, because insurance happens to be uniquely positioned where they want to leverage not just financial data, but also health data and a couple of other DPIs. So we help them across the spectrum, on that front, where we'll help them publish data in specific formats. So that's on the FIP side. And the other thing, which we've done very uniquely in the market is we believe that the current systems, backend systems that organizations were expected to be financial information providers have, were not designed with this sort of real-time APIs, and they were not built for this sort of scale and load, where data would be pulled ad hoc, without any predefined patterns, and whenever the customer wants to share it. So what has happened is uh, most of these companies may be using like a policy management system or like a core banking system or typically legacy infrastructure, which is not meant to handle this sort of scale. A few of them do have a data warehouse or a data mart or some of these things, but we've seen it's not in the greatest
Okay.
shape. So that is the challenge on the FIP side, which we try to solve, where we try to build native systems on their premises, which will service this sort of queries from real time from their customers, right? Without impacting their core system. So that's on the FIP side. And on the FIU side, again, it's very customer specific and use case specific. So that has been a USP there, that most people decided to try to go with a one size fits all approach. That here's my data, here's my analytics. Now you as a business, you decide how you want to use this analytics. For us, it was always the other way around. That the regulated entity, say like a lender or an insurer, knows product manufacturing, distribution, underwriting, risk, collections. Who are we to dictate कि यही format है and यही process and this is how you have to do it? In fact, it should be the other way around, where their domain experts are defining exactly how they want to interpret that data. So we've optimized our platform for experiments and making sure that our customers can come and define data products and interpret this data how they see fit and get it where they want it when they want it, right? So that's our role on the financial information user side.
Yeah. Just a related question here. If you could unpack this a little bit more, because say you said about 15 or 18 odd insurance companies that you're working with, and I understand they would also have their analytics departments who would also do some crunching. So how how does Finarcane sort of bring value add to the organization there? So what is it that you do which they are not able to do? Because every financial institution is sort of you know has data analytics at some level, right? I mean, even some microfinance institutions are also doing data crunching. The level at which they do is different. So just wanted to understand on the role that you play mainly on the FIU side uh, for these insurance companies and any of your other clients as well.
Got it. So fundamentally, end of the day, every single financial institution is in the business of managing risk, right? Be it a securities company or any of our lending companies, or insurance obviously is at its core is a risk management business, right? And managing risk is going into the arbitrage territory. You have to have some risk, reward trade-offs, and that is how ultimately you're able to differentiate your product. Let's face it, every market is crowded. No lender or no insurer has a monopoly. Yes, we have a LIC in the life insurance space, but if you saw the latest reports, LIC market share has also come down, and private players are picking up. And it all boils down to how you interpret this, right? Which in turn helps them price their products and ultimately target customers better and lead to better conversions and so on. Now, in order to do this, fundamentally, all of these guys should have an internal data team. In fact, we also work with a mutual fund company, an AMC, who also has an internal, data team. You may not think, a mutual fund product is a very light touch consumer product. A consumer rarely interacts with an AMC, right? But they still have a very good, a data analytics team in house. So the role that Finarkin is playing here is, one, we are bringing very, an experimentation first platform. So what we're saying is, who wins on any data analytics, place is always somebody who's able to experiment and iterate faster, right? So that is one core USP that we bring. That the way we built our platform, which is at its core, like a data workflow orchestration platform, we're able to build customized use cases and experiments for our customers very quickly. And the way our business model works is it's fundamentally usage based, pay as you go pricing. So our customers, for them, the total cost of this experiment is very negligible. And the advantage that they get is they end up scaling only the successful experiments. And therefore, what that does in turn is, if a customer is scaling with us and doing healthy volume, they're doing so solely because they saw value in that experiment. They had no otherwise obligation to sort of scale that experiment out. And ultimately most of the experiments built on or data products built on these DPI protocols lead to direct top line impacts, right? Most of the times, a couple of them are cost optimization sort of focused use cases, say around claims in insurance, or collections in say lending, for example. But by and large, the initial anchor use case, which is emerged in the first wave of early adopters, has been in the customer onboarding and underwriting phase. What sort of data can be captured, and therefore very closely tracked cohorts are built by our customers. And there is a line where role of Finarkin ends and the internal data team's role begins. So that would involve their business rule engines and their product policies, that they may want to apply. But we will get them there, say 60-70% of the way today, and we are able to get them there in a much more effective path. One, effective in the sense the total acquisition, the cost of acquisition of data and processing is a lot more competitive. Two, we are giving them new paths, right? Paths that were not existing before, or options which they didn't think were available before, right? So today, insurance companies, in fact, are leveraging insurance data for the first time. So example is historically only a certain set of customers, who are going for certain high ticket insurance products needed some additional financial underwriting. Now it makes more sense because the cost of acquisition of data is cheaper, um, to ascertain risk better. And they're also trying to leverage the existing insurance policies, Nikhil ke paas kya hai. So what this does is the reinsurer on the other end, say like a Swiss Re or a Munich Re, they are also getting more and more comfort, and only they're very familiar with the account aggregator framework, and they are also very keyed in on what is happening. So they are able to price the reinsurance portfolios aggressively also. So it's been a rolling a snowball effect that is coming through, and a lot of it happens in the background. So payments like UPI was always a very consumer driven use case, and it's a very frequent use case. Account aggregator or these other DPIs, they're largely one off. I don't every day go out and take a loan, or purchase a policy or file my taxes or so on. But and there's also the concept of a recurring consent in the account aggregator framework. So what that means is once Nikhil consents to have his data, say, pulled, once a month, then it will happen in the background. So while customers are like the awareness in the mainstream, I think consumers is yet to sort of catch on the concepts. There is a very healthy adoption. I think last I checked, I think around 8 million people have already sort of signed up as per Sahamati data. So adoption is
Yeah.
there,
Yeah.
and we are only heading up now.
Right. Right. Yeah. So I'll come to that adoption part later. I have a question there as well. So if you could just talk about your unit economics in terms of how you make money, because I think that's going to be an important part, right? So if you could just like throw light on that. So when you're working with say insurers or with lenders. So what's the business model like?
Right. So one, there because there are multiple account aggregators with each of them having their own technical implementations and offerings. There was a need for a payment aggregator sort of equivalent here. So there was a need for an aggregator of an aggregator to also exist. So there are companies like JustPay who've done really good work on the payment side. So that's one of the roles which we are playing here on the account aggregator level. And what has happened is most of the active TSPs who have decent market share are sister companies of the account aggregators. Now, maybe this is by design, or maybe they thought this was the way forward. Uh, but coincidentally, we are, I think, the only independent TSP who actually has the sort of market share we do. Every other comparable TSP has a sister account aggregator company. So this puts us in a very unique position where we are able to back our claim that we are solely obliged to the FIU, right? Because we have no skin in the account aggregator game as such. Our sole incentives are aligned with making sure my customers who are the FIUs and the FIPs are seeing success. And because my unit economics and my pricing is based on say volume and pay as you go, say on a per API call or like a per data product usage basis. So I am highly incentivized to make sure that the underlying infrastructure, be it the account aggregators or any other data sources, are performing highly efficiently on time at scale. If they do not, my revenue is impacted, right? So this what this has done is it has helped us forge good partnerships with multiple account aggregators. And of course, not having our own account aggregator helps. So that has worked in our favor. And I do believe that the account aggregator space is also a very good and a massive opportunity, but it's an opportunity for the big boys. So you have a phone pay and everyone else now starting to throw down. Uh, so we are glad to sort of help out where we can, but it's not our fight on the account aggregator front.
Oh, okay.
Right.
Nishant?
Yeah. So, Nikhil, you have talked about what happens if account aggregator is working at a level of UPI.
Yeah.
My question would be, and perhaps many will ask, isn't it a little too late? Started in 2016 or started operating in 2021. Of course, UPI took its own sweet time, but UPI had a lot of dependency on the customers. Account aggregator has a lot of dependency on the financial institutions per se, right? So if you can break down what are the challenges you are seeing, maybe some key ones which we have been able to sort out, and what are the future which are yet to be sorted. If you can highlight it at account aggregator level or FIU level or FIP level to help us understand what it will take for account aggregator to operate at a level of UPI.
Right. So one is lately, RBI has been granting more and more NBFCA licenses, right? And the license is not cheap. You have to have a paid up capital of around 2 CR. Plus, obviously, there'll be a bunch of additional costs involved. Net, it's not for the lighthearted. There's a deep background check and a bunch of other steps and processes. But my point is these are some very smart people who are applying for a license, and we already have around 9 or 10 operational account aggregators now. Last I checked. So everyone cannot be doing the same thing if they and going after the same customers and going after the same things, right? Or it'll just lead to further value erosion. So one, I believe that the new account aggregators or I'm sure there are some, unknown unknowns out there that, these companies are thinking of as to how to expand this market and, get it to that scale. Because most of these guys also understand that, if it's a volumes game, you have to increase the size of the opportunity. It may not be obvious today, but, how do you do that? So answers and, challenges to the second point of your question. One is coverage. So on the FIP side, we need better coverage of more asset classes. So we have banking asset classes, we have insurance data, but say banks are not turned down current account data or FDRD data, for example, right? So that's also defined as a part of the technical specification, but by and large, it's not coming today. Similarly, a couple of banks, like SBI, for example, uh, performance is not good. There are API rate limits, and for whatever reasons, they have their own reasons, I'm sure. But let's say, hypothetically tomorrow, SBI, improves the performance and fixes fixes the internal FIP infrastructure, or they could just hire us. But uh, our revenue and most of the volumes in the A ecosystem will double overnight, or maybe triple, right? So that is some of the challenges. The other is, of course, performance. Something like P99 SLAs and so on. So again, to not make it technical, what basically it means is, let's say as a consumer, I am applying for some financial product, and I'm going through this digital journey of sharing my data through the account aggregator framework. Now, how long would a customer, reasonably expect to wait to share his data? Maybe a few seconds, on a good day. And, if the customer, really wants that financial product, tens of seconds.
Right.
So performance is a mixed bag on the account aggregator ecosystem today. So that's the other challenge, which is sort of, holding us back on the adoption side. But, these are all problems which are being raised by all market participants. And the financial information providers themselves are also FIUs. So HDFC Bank or an SBI or all of these guys equally are also users on the other end. So I think this way the design works. There is a core principle of reciprocity, and I think incentives need to be aligned. I always feel that there are no hard problems. There are only incentives which are not aligned. So it's all about getting that equation right. And once this happens, uh, I don't see why we will not easily hit the sort of UPI scale that we see today. But as to
Right.
when, very confusing. We'll have to see.
Yeah, I understand. Even UPI took demonetization and perhaps Geo to go where it is today. But having said that, is it the right expectation? Because UPI is much more high frequent. Everybody has to use the payment at some level. Are we setting the right expectation that it should be
Yeah,
as pervasive as UPI?
correct. So this is where I differentiate a lot. A lot of people call this the next UPI movement. I think what almost everyone is getting wrong though, and obviously I may be wrong here, is that volume is not the right lens to look at it. The way when I say this can be as big as UPI, I am looking at it from a value perspective. What does the account aggregator enable? So value creation and the net positive impact on our economy. I think the account aggregator there can play just as a massive role as UPI plays today. So I'll give you an example. Just the other day, GST, data and schema has gone live on the account aggregator page.
Right. Right.
And the big consulting companies, very intelligent people, the reports will start coming out fairly soon. But what we've seen is that the MSME lending, volumes will double. Is what people are projecting in the next 3 years, and it's not just on, say, GST registered companies. There's another DPI which we've not mentioned in this discussion so far, Oken, which is the Open Credit Enablement Network, that is also undergoing a massive facelift. So there's a new version of Open called Open 4.0, which will be launching very soon in the coming month or so. And that has massive changes, which is again, drastically going to drive the, say, cost of credit manufacturing and distribution for MSMEs down, right? So risk-taking ability of, say, NBFCs and lenders who may want to finance MSMEs will increase, because the unit economics will make a lot more sense on the open network. And yeah, so that's what I mean, that the ecosystem, these DPIs will enable value creation, which will be comparable to UPI. Volumes, you're right. It's a fool's errand to expect sort of high frequency volumes that we see in UPI on say something like the account aggregator.
And the interesting perspective that you have brought, Nikhil, is not only from the customer's convenience end, but many a times when we reach out to insurtechs and say that why you are not innovating, they are saying there is not enough data at the insurance company's end to design the products. And I think the real innovation will also be due to account aggregator will also happen when, say, I am able to launch a parametric insurance for a street vendor, right? Because I have a set of data of how street vendors are behaving on the lending side of it, right? Or maybe their demographic data, right? But a little controversial, but help me understand. Do you think that 8 or 9 or multiple account aggregators into the picture, is it helping, or there should have been just one or two, and that would have been much better in terms of increasing the users?
Yeah, and just a connected question to this, Nikhil. Currently, like what we hear a lot of banks saying that at a customer's level there is interoperability, right? So I being a customer, I can walk up to I can download an app of any account aggregator, and then that's fine. But then for a bank, they need to get into individual integrations with the 11 or 12 account aggregators which are there, and they will also increase. Number of integrations will also increase. So is there a possibility of some kind of interoperability at their level as well, wherein they do it with only one and then all of them are covered? Just to add that as well.
Right. So Sunil, I'll take your question first. Short-term solution for that problem is companies like us, where we make sure that complexity is completely abstracted. We've been able to get our customers sort of go from contract to sort of going live with the first set of account aggregators in, I think, 14 days or so. So I think that's a fantastic speed. But long term, there are a few solutions that Samati is working on, and I think there will be some pushback from different stakeholders on that. But we are optimistic on that, because again, if we are fundamentally saying that the revenue and the the unit economics and the value creation is all happening on the financial information user side, where data is used, then making the lowering the access entry barriers on the FIP side always helps to get that network effect going, right? So from that lens, I think we are completely aligned. We have to make the entry barriers for the financial information providers to enter seamless, to partner with multiple account aggregators seamless, and we're trying our best to do that. And coming to Nishant's question, do we need multiple account aggregators? I believe we do, and I'll tell you why. One is, let's say hypothetically we had just one or two account aggregators. What that would have done is prices wouldn't have fundamentally come down as quickly that they did on the ecosystem, and it doesn't help me very clearly. But who it helps? It helps the end consumers, right?
Yeah.
So now it makes more sense for a larger a segment of the population to have these value add data driven services. You know, and what this does is it enables challengers on the FIU side. So let's say, I'm a challenger, new age digital NBFC, for example, right? Or say I'm a insurer. So one of our insurers, Aegon Life, it's a purely digital insurance company. They do not have agent network, and they have been using the account aggregator really well. I think they are the best success and adoption metrics, and I think this is the impact that um, the choice is there for these challengers to step up and actually not just take away market share from say their incumbents or competitors, but actually build new markets, build new products, and to Nishant's point, like the parametric insurance example. Actually, there are a few insurance companies who are building new insurance products, but they're initially starting on the L side because better market opportunity and under penetration and all of that. But in due time, I'm sure we'll see innovation across the spectrum there. So having multiple account
Right.
aggregators,
No,
help pave that path.
thanks, Nikhil. I think this was helpful. If I can push you a little bit on the inclusion side of it, um, MSC works a lot with very vulnerable groups, say SHGs, state vendors. One example I gave. There has to be enough data points for them before account aggregator can start feeding it, right? And I think this will start happening once they will realize that they are getting a very tangible benefit by allowing UPI transactions to happen from their stores, right? So this will start fitting in. But at this stage, do you think that there are opportunities to work with that segment of people, or they can benefit from account aggregator? Are you seeing some use cases being defined through your partners?
Right. So we are seeing a few use cases. Definitely on Oken, the new version of Oken, we'll see bunch
Right.
of new networks coming in. So in the initial wave of Oken, which is the lending protocol for the listeners, the uh, network which was live was GEM, which is the government e-marketplace, and they had a GEM Sahai
Right.
app for
Right.
cash flow based lending against the government invoices. So the buyer was always the government, and therefore there was say a surety of payouts, and then the sellers who were accessing credit were MSMEs on the GEM Sahai portal. Which was using the account aggregator framework and the Oken protocol for lending. Eh, so they know now we're expanding that. Now Open 4.0 will be a network of networks. We'll have a borrower agent concept. We're moving away from the LSP or the loan service provider paradigm to a new concept. But my point is, these new products are being built, and it will take a while to validate it. And theoretically, two or three people on a podcast, we can talk and debate all we want, but ground reality is sometimes different. So I like I'll give you a quick example. We try to do some end consumer surveys because we're really bullish on the whole Open initiative. And what we found was that there's a subsegment which understands the value of accepting digital payments and GST and so on. But they don't want to get a GST license. They don't want to accept digital payments because they are not say interested in being part of the formal system and paying taxes and a bunch of other things. So वहां पे क्या हो सकता है, I don't know. That's a different problem. Like how do you align incentives so that even this segment is willing to participate? I think that's again a interesting tangential problem to be looked at. But
Right.
for people who are looking for these services and who are part of the formal system and who are accepting this digital payments or have a GST footprint, very soon they will have access to broader financial services.
Right.
Hmm.
Right. Sunil?
Yeah, some numbers with respect to the account aggregator ecosystem. Since we have spoken about UPI as well, only 8 banks were live. Like when we opened it in 2021. Now there are more than 300 financial institutions. Right, Samati data says it includes public sector banks, major private sector banks, insurance companies, and others. Though non-banks are not there. And in financial year 23 itself, right, about 6,500 crores Indian rupees or $750 million has been disbursed using the account aggregator framework. I mean, the underwriting facilitated through account aggregators. And about 50% of it has been to the MSME sector. Though, I mean, this number is very small as compared to the gap which we are talking about. Still, I mean, it's a huge amount that way. And if you look at the number of accounts itself, right, close to about 11 million accounts are linked as of June, and it was up from like 0 accounts when this account aggregator framework started in 2021, right? So you can see the curve, like very steep that way. But Nikhil, the question is, data says that there are like more than 1.1 billion accounts which are eligible to kind of share data, but we have only about 11 million, right? So just to take forward Nishant's question, on what does it take for people to kind of adopt this? I mean, is it the trust in the system, or is it incentives? Because incentives played a major role for uptake of UPI, right? I mean, like 3 to 4 years back, you have seen the kind of cashbacks. People are just transacting for cashbacks. And when even Bheem had come into picture, I mean, incentives are paid for just referring people onto the Bheem app. Or is it awareness, trust, incentive, or awareness, or is it a combination of all of this? So what do you think? Maybe you can just take about a minute and a half. You have answered a part of this earlier as well.
Yeah. So we internally have a framework, we call trust, utility, and ubiquity. So trust in the ecosystem, utility of the ecosystem, and it being ubiquitous. This is what is going to drive adoption fundamentally. One, two, I think people who did that 1.1 billion number wali headline, I think they got a little carried away when SBI went live on the account aggregator ecosystem. That headline is part of that, when SBI went live. So just because SBI or some of these bigger institutions like an NSDL or CDSL has these many demat accounts or these many bank accounts, on paper they're eligible, but customers, end users, owners of these accounts still need to find a legitimate purpose, or a use case where they would create a handle, link their accounts, and subsequently give consent, right? So that has to happen. And again, coming to the payments example, see, payments was always a high frequency, high intent use case. Every day, we make some payments or some purchases. Now it was just a matter of shifting, the instrument, and that is where incentives like cashback or something really worked to funnel that customer into that new instrument. Here, I don't wake up every day to share my data, right? Fundamentally, I am not getting credit or any sort of financial products and services. A few daily usage, high frequency products where we are now seeing adoption is, say, personal finance. There are a few neobanks, who build really good journeys with the account aggregator ecosystem. Like Fi, Jupiter, and companies like IND Money and so on, who built great journeys on the account aggregator framework, which have some sort of daily high frequency usage. But again, just you look at the reach of these companies also, right? It's minuscule. It's a drop in the bucket if we're talking about the sort of numbers we're talking about. So so it'll be it's a work in progress, and trust, utility, ubiquity.
Yeah. So just a follow-up question on this. On the consent, right? I mean, data is passed to a financial information user, and then I mean, it's all encrypted and safe and all that you explained. But is there enough governance built in the account aggregator system to ensure privacy? Because earlier in the podcast, you also spoke about data privacy, right? So how does the customer know that the FIU will use the data for the intended purpose and not sort of misuse it? So is that confidence there amongst the customer or even amongst the financial institutions? Because we are talking of trust as well, right? In your framework as well, trust is one of the first part, and in and that's going to drive. So do you think we have enough of trust that my data is used for the right purposes?
So no, I would say this is a challenge in the framework today, and it's not an isolated problem. It's broadly that India lacks the data privacy law today, right? I think that is the bigger challenge at hand. The data protection bill has been in lingo for so many years. I think every year we hear monsoon session mein aane wala hai. Monsoons come and go, but the bill has not come. So I think that's a big concern. Recently, there was a very good paper around governance, published by a legal think tank out of Delhi called, I think, Vidhi
With it,
Legal.
yeah.
Yeah. So they had published a very good paper around governance of DPIs and the account aggregator framework. So I think those recommendations are good.
Right,
But the good hard solution to this problem we see is a robust data protection law, a data appellate authority, and we need guardrails. There's no doubt about it. And at a technical level, we've built some infrastructure. So we've been building things around confidential compute sort of technology where there is purpose enforcement, that data is processed only for a set purpose and subsequently shared. Only the derived information is shared and not say the data itself. Right? And because data is anyways historical and immutable in nature, there can always be a retrospective sort of forensic financial audit if needed, to check our process if for whatever reason something blows up. So there's no real reason to actually keep data anymore.
Right.
But these are good to have in a post data protection bill world. It'll be a must have, right? So that's our read of the market today.
Right. Yeah. So the other thing is UPI. I mean, very, very popular. Like I said, 9.5 billion transactions per month. But then if you look at the number of people who do UPI, I mean, 250 million, 260 million. That's the number which is sort of going on from 140 to 250. I think it has increased, but then we are not seeing further increase. So the same set of people are doing more transactions, right? So I think that's the inference. So UPI came up with UPI 123 Pay, right, for feature phones, which is again a 40 crore odd market, 400 million. So one of the questions which is also asked is the account aggregator system also sort of bringing in more digital divide, wherein only one set of people, because it requires a smartphone, right? So only one set of people are using it more effectively because they can do it on their own, whereas people who are not very tech savvy would still have to depend on an assisted sort of mode. So now that assistance could be offered by either an agent or a bank sakhi or anyone, right? There are so many business correspondents and people like that. So just wanted your view. I mean, is this ecosystem more, I mean, built, what's going to be the future? Is it more self-usage or is it more assisted usage, or a combination would work if you have to sort of popularize this?
Right. So this, I think what you outlined is fundamentally the cold start problem for this ecosystem, right? It's a flywheel that had to start somewhere. And we started with the digitally savvy smartphone wielding population, no doubt about it. But there are initiatives and work in progress. So already we see a lot of localized sort of SDKs and journeys, for example, where concepts like consent and account linking and data sharing. It's scary, right, for a lot of people. In fact, and then we have this, RBI campaign around, no OTP sharing or something like that. And यहाँ पे ये journey में, it's a journey of OTPs. If you write the account aggregator today, for every financial information provider you link, it's a trustless ecosystem by design. So an FIP is ensuring that did you actually initiate this linking process to link with the account aggregator, and equally the account aggregator will have a two-factor authentication if you've actually signed up and so on. So I understand where the regulators and everyone's coming from. We need to security is of the utmost importance since it's highly sensitive PII data. But these these rails will emerge. You know, who's going to drive it? I don't know today. It should ideally be TSPs or people who want to expand the market, because it is actually in our incentive to build for a larger market, right? So the account aggregators and the TSPs have to take up this mantle to actually expand the addressable market and the opportunity here. And we are working on it, at a Finarkin level, but we cannot do everything. So I would love for other
Yeah.
listeners and my peers to also step up on this.
Yeah, a lot of opportunities for you in the coming months and years on this, I think. Yeah. So just a last question on the lab itself, right? You are a part of the financial inclusion lab run jointly by CII, Co and MSc. So just I mean, if you could share your experiences on how the lab helped you in this journey, because I remember when we used to have discussions with you when you had joined. I mean, you were just looking for partners, and now here you are with 18 odd insurance players. So I think there is definitely a growth. So just want to understand how the lab has sort of benefited you in your journey.
Right. So we were early to the ecosystem, like with respect to timing and everything. And startups can afford to be early, provided we have the patience. We cannot afford to be late, because we do not have the capital to then outspend and play catch up, right? So time and being early always works in our favor. But there were a lot of unknown unknowns when we arrived as a part of Cohort 4 at the FI lab. So I think the first few technical assistance sessions that we had with MSc, they revolved around market research, understanding who are the financial entities today, what sort of data infrastructure they have today, are they even aware of the account aggregator ecosystem, right? And the timeline was, I think, 2021, when we were part of FI lab, right? So 2021 was still very early. It was even before the September launch of the account aggregator ecosystem. So a lot of evangelization and market research had to happen. So there we got great assistance. And then the second area, which again was which is part of more like a category creation problem, is how does the market evolve? What is the pricing capacity, unit economics, and just the business model, how that should shape up. So there we got very good initial assistance to get our first few versions out. We made a lot of progress since then. Every 2 or 3 customers we try to revise our business model. That's the practice we've been following. And but MSc and the technical assistance sort of helped set that foundation for us. And that's what we are in a good position today.
Yeah. Happy to know that. Thank you. So I think thanks a lot, Nikhil, for your ideas. It was a pleasure talking to you, and you helped us kind of break down these difficult concepts of account aggregator, TSP, FIP, FIU, and how the unit economics works, right? So so thanks a lot for this, and And yeah, looking forward to more such interactions and wishing you all the very best. Yeah, thank you very
Thank you.
much.
Thank you, and
Yeah.
likewise.
Thank you.
Thanks, Dr.
Thanks, Nishant.